What's up, everybody? Welcome to another episode of Coffeez for Closers. Today I'm sitting down with a very special guest. He is currently in... What's up, everybody? Welcome to another episode of Coffeez for Closers. Today I'm sitting down with a very special guest. He is currently the chairman of the Loan Store. He is also a board member on Aveo and SOAR. He is a legend in the mortgage industry. He was the founder of HomePoint, the founder of InterFirst Wholesale, someone who's absolutely changed the mortgage industry for the better. Please welcome Mr. Willie Newman.
Thank you, Joe. I appreciate it.
You
I don't
like
know if legend means I'm old. I think that's what it means, but I'll take it. It's fine.
No. True legend.
Thank you.
And I appreciate you for coming on the show. And
Sure.
I know I threw it at you real quick, and I love how attentive and willing you were to just say, all right, let's do it.
I'm excited.
So thank you. So Willie, I know you're actually from Michigan, aren't you?
I am, yeah. I live in Ann Arbor.
Nice.
I don't know if I should say that here, though, but I do anyway.
So we'll talk about. I like to start the show with an icebreaker. Everybody, I ask the same question. I know that this has probably changed because after your exit from HomePoint, and you probably aren't as rigid with your schedule. Maybe you are. But what is your morning routine right now?
I typically wake up, have 2 cups of coffee, and then I work out. And sometimes I read before that. It kind of depends on what time I wake up. But those are the 3 things that I do in the morning. Nice.
So what's it like now, not having to grind as hard as you once did?
It's hard to get used to, actually. And I think that, you ask about routines. That's one of the things that I've tried to actually break a little bit is like, I don't have to do things at a certain time, and I don't have to have an order to things. I can change it up and, try different things and maybe sleep in once in a while. So it is different. It's definitely different. And I missed it for a little while, but I don't now, at least at this point.
Someone who's achieved such great heights of success like yourself, what was it like transitioning, like that transition from being so incredibly busy, the grind, the compliance, all the different facets of this demanding industry, and then going into like, all right, I'm gonna be the chairman and just kind of get to bounce around and.
Yeah, I think in a lot of ways it's good and it's healthy. I think one of the things that it takes a little while to get used to is you're not in control of things, right? So you may see something that you say, well, that's not right. It should be this way, or I would do it differently. And you can suggest that, but you aren't able to implement that. So you have to kind of learn how to work through influence and work through ensuring that you're supporting whatever your thesis is, you're supporting it with information and facts, not, hey, it's my idea, we should do it. Whereas, if you're the CEO of a company, you can kind of say, I want to do this, so we're going to do this. So it's been interesting, and I think it's healthy to do that.
Yeah. So what made you decide, like after HomePoint, you're like, I'm over it. I'm done. I'm not going to do it again.
I think, like you said, Joe, it was just the grind, right? I mean, I've been doing it, pretty much for 30 years. I had a little time off during the financial crisis, which was nice. But my kids are grown, and there's a lot of other things that I can do and a lot of other places I can be. So I decided, I'd like to do that as opposed to kind of going back in and diving in and working 12 hours a day. I kind of like this routine versus that.
This routine is much more, in your pace right now.
Yeah, well, it allows you to think. It allows you to think too. Where I used to have to schedule time. I kind of learned this. I would schedule time in my schedule to actually not do something, right? Because my day would be packed, and I'd be like, I have to think. I'm not going to be as good of a leader if I don't think and I don't process and I don't research and find information that is not intuitive to me. So now I can do all of that.
Yeah, that's awesome. And I hope, and I can only dream to be in your position one day, just to be the chairman on the board of a couple companies, and not having to worry about the grind as much. You get to be out here at this event, you get to bounce around and kind of.
I know people ask, like, what are you doing here? And I was like, well, I'm very interested, especially interested in mortgage brokers in particular, because that's really how I built my career. But also I'm interested, as we talked about, I'm interested in helping my friends. So I talk to Matt Ishbia, frequently. A lot of my friends are here. You're here. So it's really been fun to kind of re-engage with people. that I don't see as often anymore.
Yeah, it's a great environment, right? It's a great social environment. You get to have a good time.
Totally.
So let's talk about your history. So I want to dive. We're going to go back.
Whoa, way back.
We're going to go back.
The way back machine.
So let's let's go back into what year did you get started in the industry?
So I guess technically it was 89.
89.
Yeah.
And what'd you do in college? Like, what'd you graduate?
I graduated with finance. I went to
Finance.
University of Michigan, got a BBA in finance.
And then straight into the mortgage industry.
No, I worked for a savings and loan for a couple of years, and I did learn elements of the mortgage business through that job, but it wasn't solely focused on mortgage. And then I met this gentleman that became my mentor, and he hired me, and he's like, I'm going to build a mortgage business and another savings and loan. And he said, I want you to be the head of secondary marketing. And I was like, I'm not sure exactly what that is, but that sounds like something I'd like to do. So he hired me, and it kind of went from there.
Nice. But you didn't get, like, a lot of people go into the mortgage industry through retail or through a broker. You went to the mortgage industry through savings and loans, which candidly is like the most stable way to get into the mortgage industry.
Well, then there was this little thing called the savings and loan crisis, and what was happening
prior to the savings and loan crisis.
That's right. Well, I was in it after the savings and loan crisis. So what happened was, the gentleman that became my mentor saw that these traditional savings and loans were actually starting to fail, or they were failing left and right by that time, and there were all these loan officers that were originating for these savings and loans that didn't have anywhere to go. And there was this little kind of legal construct called a mortgage brokerage, but it wasn't really used as it is today for mainstream lending and obviously kind of more mass market. It was really a very niche-y type of a segment in the industry. But my boss was like, why can't it be for everybody? Because there's all these loan officers that still know how to originate. There's this construct, and what we did is we facilitated their access to the secondary market. And back then, Freddie Mac and Fannie Mae were they were kind of in their infancy still.
Yeah.
So he saw all of this, and he put it all together. And of course, I was 24 years old, so what did I know? But I was like, this sounds pretty cool, so I'm going to try it. And it kind of went from there. And I mean, he was a tremendous mentor to me.
For the audience listening, can you explain the difference between a savings and loan and a normal bank?
Yeah, so I think now they're kind of, it's a little bit merged, but back then a savings and loan primarily focused on home lending. So whereas banks focused on more commercial lending, and there were actually guidelines, limits to, or minimums that savings and loans had to lend from a mortgage perspective. So it really kind of, banks did do a lot of mortgages, and the savings and loans did do a lot of commercial loans. And then that all kind of got a little bit messy, and that's kind of what spawned the savings and loan crisis.
Yeah. And I think Wells Fargo was the first to add that, like Wells Fargo's, is it called like Wells Fargo? No, the home loans. It basically kind of like.
Yeah, they formed. They were one of the few banks that formed a subsidiary that said, and this is going way back, but they were the product of several different mergers, and one of the mergers was Fleet, who had a pretty big mortgage company. So they kind of combined it up and said, let's do mortgage too.
Now, okay, so you went from savings and loans to working in the secondary market. Now, when did you start your own mortgage company?
Oh, well, I started a mortgage business for a bank called Cole Taylor Bank in 2009, and then started Home Point. That was the first company that I started de novo as an independent company, and that was 2014.
De novo was the first company you started? Okay.
Yeah.
So
I built businesses for banks. Or financial institutions.
And then
previously.
then InterFirst, you started in.
That was the one I joined in '89. So we basically started building the mortgage business in that savings and loan in 1989.
Wow. Okay. And then they sold to.
We sold to another bank called Standard Federal Bank. It was actually here in Michigan, and then that got sold to ABN AMRO. And the good thing about that, Joe, is that every time we got bought, we were at about our limit from a lending standpoint because you need capital to lend, and we would kind of run up against our limits because we were fortunately successful at growing. And then we got bought, and then we got more capital, and then we grew again, and then we hit a ceiling, and then we got bought. And ABN AMRO was an international bank that we felt like had limitless capital, and we kind of tested their limits as well for, again, a fortunate problem to have.
That's awesome. So every time these are like, and you were CEO the whole time?
Well, I was one of the two top people.
Yeah.
Each time.
Nice. So then
I kind of ran the mortgage side of it.
And then after that final exit with ABN AMRO, you were like, you were able to retire again.
I could have, yeah.
Yeah, and then you were crazy enough to start your own mortgage company after that. Why did you do that?
Well, so we sold ABN in 2007, and obviously that was like really when the financial crisis was just starting to hit. And so I guess, fortunately or unfortunately, for at least a year or so, there was really no opportunity to do anything in mortgage. And so I was like, oh, maybe there's something else I could do with my life, right? And so I was looking around, maybe I'll be this or I'll be that. And you know how it is. Sure enough, it's like it just starts sucking you back in. And, the market started to open up just a little bit. And I had a bunch of people that I worked with previously that were suffering. And so I said, you know what? I think I'm going to give this another shot. And, in my experience, the best time to start something is when the market's disrupted, not when when the market's at its peak, everyone's doing well, right?
Yeah.
It's kind of like the analogy of hiring loan officers, as you know.
Yeah.
It's hard to hire them when they have 20 loans in their pipeline, but when they have 3 or 4, it's a great opportunity, right?
And especially right now when they're suffering. I mean,
Totally.
we're having our best years of recruiting, in the last couple of years.
I mean, it totally makes sense. So you kind of extend that analogy to kind of business generally. It's like when the market's down, it's a great time to start. It's hard, but it's a great time to start.
And you started Home Point 09.
No, Home Point was 14.
14.
I started Cole Taylor Mortgage for Cole Taylor Bank in 09.
09, okay. And then you had an exit out of that one too.
I left it in 2014.
Okay. Now 2014, Home Point.
And then I said, I'm going to do it again, one more time.
Oh my gosh, man! You after multiple
I'm sticking
exits,
to that now, only one more time. So
yeah,
at least
I
so
wonder
far.
if you're going to do it again. Like you've had so many.
No
exits.
newsflash.
It depends on like how bored you get, But I think this time you found like you're pretty busy.
Yeah, I think so. Well, so are you a parent? Do you have kids?
4 kids.
Okay, so I have 3, and my kids are adults now. But I think part of like learning, parent, like I was saying with off camera, was that you can tell your kids what to do for so long, and they grow up, and then they decide what they're going to do. But you can try to influence them, and I'm enjoying the influencing part of it now. So what I'm doing, and I'm working in different industries. I'm working with different CEOs, different personality types. So that I'm getting a different type of enjoyment out of what I'm doing now versus building or running something, or building something from scratch.
Yeah, and that's awesome because you get to work with true innovators.
Exactly.
And get a different perspective and influence people who have influence on a younger society.
Yeah, and it's interesting you say that because most of the people that I'm working with are younger than I am, and a couple of them are materially younger than I am. And so they're helping me learn about kind of what motivates them, because it's not the same as a person who's my age or my generation, I guess.
Yeah. Did any of your kids go down the path of mortgage?
Oh God, no.
You never condone that, huh?
I tried not to influence them on what they did, and they just showed no interest. So I actually have, my oldest is actually a rocket scientist. She works for NASA. So I can't really complain about that. And
That's awesome.
My middle daughter is works in education, and my youngest daughter is in grad school. So they're all taking their own path, and they're doing great with it.
And I'm going to dive into parenting, and especially parenting
Oh,
advice.
boy.
Me having 4 kids.
How old are your kids?
10. He's going to turn 9 at the end of the month. So everything's.
Oh,
gonna
you got
change.
a lot of runway there, buddy.
And then I have a 4-year-old, and then a 2-year-old. She'll be 3 in July, so
Right.
end of July. So I'm in the thick of it. My wife's a hero. She happened to. I experienced like being a dad when my wife went away for a Mother's Day trip, and I had all the kids by myself.
Oh yeah.
And it was like, the kids abused me. I was like, my wife is a champion.
Well, I'm a divorced parent, and so when my kids were younger, it was like I look around and no one's here. They're except me, right? So when they were with me, it was me and them.
Yeah.
And it's you'll learn pretty quick.
Yeah, they're a handful at this age.
Yeah, right.
They know how to kind of play dad because I'm a sucker. Because when I'm there, like I grind all day long, and then I see the kids. It's like I'm.
Yeah, right.
Really, like Disneyland dad.
Well, plus you don't have to deal with the ramifications of that, right?
Yeah.
Typically, it's
Yeah,
like
exactly.
Yeah, I'll spoil them, and then that's it.
Yeah, then I'm out. Back to work.
Right. Exactly.
So you've managed to get through so many hardships, throughout the mortgage crisis. Any particular hardships that you can remember that really you think reshaped how you do business? Like Was it the financial crisis? I mean, you've been through multiple downturns in the market.
Yeah.
Any notable ones that you think?
Well, I think probably one of the most influential periods of time was when we grew very rapidly at ABN AMRO, and frankly, we grew too fast. And as a result, we ended up taking some losses that we had not anticipated. Now, we had done really well financially the 2 years prior, but there were some unanticipated losses that happened subsequent. And the lesson that it taught me was that it's like, no matter how strong you think your strategy is, because again, it was my mentor and me who were running the company. You have to have the depth of knowledge around you in order to build to that next level. And so yeah, it taught me, one, that, and then two, the importance of culture. And I thought we had a strong culture, but it wasn't. It was a fun culture, but it wasn't a strong culture, if that makes sense. Because there were signs that these things were happening that were identified after we took the hit, so to speak, that we should have known sooner if people would have raised their hand and said, hey, by the way, this is happening. And that was, again, the culture was fun, but it wasn't strong enough for people to feel comfortable raising their hand and going, I'm not sure what we're doing here is exactly what we should be doing. So, both those things really influenced me, as I was fortunate enough to build 2 other businesses. They really influenced me in how I did those.
How did you pivot to creating a strong culture after that?
Well, one, I think you try to make people feel comfortable that there aren't going to be negative ramifications associated with raising your hand. So it's a matter of fact, there are more negative ramifications associated with not raising your hands. So it's like, you really should feel comfortable participating. You really should feel comfortable telling us what you see and what you believe. And then two is, kind of related to that was like, treat those people well, and other people will see how they're treated and they'll kind of act accordingly.
And I noticed that Home Point had a great culture, and everyone who worked at Home Point loved Home Point. And they were like diehard Home Point, fans basically. And the thing I noticed, about Home Point, like they're there to the very end, and after we have kind of Home Point 2.0 with the loan store, and I talked about this with Phil. It's like he's developed an excellent company culture, completely virtually, kind of on the same principles he actually mentioned.
Right.
That there's a huge component of collaboration, and he used the term raising their hand as well.
Right.
People, always speak up, just, a suggestion box type of culture.
Right. And not feeling like that their role is the only thing they can do for the company. So, if you need to pitch in, you pitch in. If you see something that, there's paper on the floor, you pick it up, right? So, and I see that with Phil and how he's leading now, and I'd like to believe that's how we also had it at Home Point. I think the other thing that we really did well was, during the pandemic, we really listened to the stressors that our associates had outside of work, and we tried to respond to those as well as we could. As an example, the leadership of the company, actually, we pooled our own money because we didn't want to deal with the tax ramifications and all that. We actually pooled some of our own funds, and we had this, it was basically an emergency fund. And we said, we'll give you up to $500, and we want you to tell us why, only because we want to track the reason, but we're not judging whether it's like an appropriate thing to give money to or not. So literally, if you or anybody else who worked at Home Point could say, man, I need $400 because I got this bill and I didn't expect it. And we'd be like, here's $400. So I think that engendered the culture that you're referring to.
So you had just a slush fund for people who needed it?
Well, slush fund is not exactly how I would characterize it. But
No, just no.
we had an emergency fund.
That's awesome.
Yeah.
I've never even heard of something like that. So just how much was the most you gave at one point?
It was $500 was the max.
And it was
And I think we ended up giving $30,000 to $35,000, and it was all leadership. Like I said, we didn't want to go, here's $500, but you're going to get we're going to take 100 out, or you're going to have to pay 100. We just we'll fund this ourselves. So we just funded it ourselves. I actually distributed the money.
What was the name of that initiative?
You know what? I don't remember now.
Yeah, how did you frame that? That sounds cool. It's
yeah, I think it was just you need money, we'll give it to you, But what we wanted, I mean, if you think about back then, and even now, but I mean, especially back then, there are all these new stressors on people's lives, and we just wanted to kind of, and as you know, it was one of the busiest times ever in the business. So we just wanted people to not, it's like, we want to take as much of the worry that you have off as possible. You know, we can't prevent you from getting COVID, but we can help you be a little more comfortable in you know, the day-to-day life that you have now that's been disrupted by the pandemic.
So yeah, so that's a great idea, and that's actually a good idea just to keep as an initiative for the company. Like,
Yeah.
And then was there a limit monthly that you would disperse?
No, it was just like we dispersed it until the money was gone, basically.
So
and then I think we actually did 2 contributions. I think we had one pool, and then we figured out more people needed money, and I think we did another one. So I think it was like 25 and 10 or something like that.
And it was an anonymous thing, like.
No, we actually tracked it. Like I said,
Okay.
we track it again only because we wanted to know what the stressors were. So if there were things we could do more systematically with the stressors. So one of the things that we did from that was, you know, I mean, you're constantly working with, you know, we're hiring pretty rapidly. We're constantly working with technology providers. So we ended up having all these laptops, some of which we'd replace out and, you know, kind of get the new version and all that. So we started giving laptops to the kids of our associates because, again, they were school remotely. They may or may not have access to technology. So we give them laptops. So we did several hundred laptops to children of our associates.
That's awesome. Listen, all of that contributes to developing excellent company culture and kind of hearing how some of the little nuggets that you established early on to encourage that company culture. I mean, it's not like it paid 10x. It's paying dividends forever.
Right.
You know, like you were able to create like a spin-off off of HomePoint because everyone was diehard HomePoint.
Right.
So what's the vision now with the other company you're chairman of? Like, do you have lofty goals like you had, or?
Well, you know, now they're Phil's goals, so
yeah.
I'll let him.
And he already told us his goals.
Oh, did he? What did he say? I better check. But I think for me, the reason that I'm involved is, other than there are a lot of people there that I care about, is that if you look at kind of the broker segment, you know, as we've talked about here at UWM Live, it's growing, it's healthy, but there's one really large advocate / lender. There's another one who's not quite as big, but you know, there's divergent perspectives on who they are. And then there's a bunch of really small lenders. And
I mean, by small, like the loan store doing $600 million last month, that's not small.
I know, we're getting there. The loan store is getting there, but I think, you know, in my opinion, I'm saying this now as a direct, you know, I'm directly involved with the loan store, but I believe that there needs to be 2 or 3 other companies, not of the size of UWM, but that are of a size that, you know, people can look at them and say, okay, they're significant players in the industry. So we hope that the Loan Store will be one of those. And I think there are several other companies out there that have the opportunity to do that. And, you know, frankly, I talk to a couple of them, and, you know, I try to help them, just like I try to help UWM, because I think, you know, the broker segment is only going to be as strong as UWM is at the end of the day. I mean, they have 45-50% market share.
Yeah, right now, Matt he recently announced that the broker segment is up to 24.2% market share. Mm-hmm. Now, in your days, you've seen the broker market share up to, what was the highest you've seen it at?
Yeah, I mean, reports differ, but, you know, 50%, 60%.
Broker market share.
Yeah, somewhere in that range.
Yeah, and this is the highest we've seen broker market share in 15
definitely post-crisis.
years.
Yeah, post-crisis.
So, you know, broker market share is starting to increase. What is it about the broker that attracts you so much to this environment, to the broker?
Yeah, so, I mean, so like, you know, we talked about, so I've done this 3 different times, or I built 3 different mortgage businesses. And every time I looked at, okay, where was the best opportunity to build and grow? And what was the best opportunity for the consumer? And every time it was the broker segment. And you know, frankly, it's because I think the broker's superpower is choice, which kind of leads to having more strong lenders in the segment, I think is a good thing. So, you know, again, that's kind of part of the motivation behind helping the loan store out. But if the broker superpower is choice, they have the opportunity to really help the consumer get the best deal possible. And so, and that's a series of factors, not just price, right? Convenience, speed, the ability to execute on a timely basis. So every time I've looked at it, it's been that. And if you look at retail as an example, there are a number of really strong retail companies. So I'm not here to say, everyone should use a broker all the time. But if you look at a lot of retail companies, they basically their loan officers have one choice. So it's hard to be competitive all the time when you really only have one option as a loan officer.
Yeah, and it was great, always, because we were you guys, Home Point was our number 2.
Mm-hmm.
Now, I think the loan stores, like our number 6 or 7, they're climbing up the ranks as well. And,
Good.
And that's big for a company with 900 loan officers, for us to have. But our number 1, takes up 90% of our market share,
Sure.
and then the other 7 get 10%, which is still significant considering the amount of volume that we do. But it is great to have a good, reliable partner.
Right.
It was disheartening to lose Home Point, obviously. What do you think some of the biggest issues that caused the fall of such a massive partner, Home Point?
Oh, so you mean what were the challenges that we had?
Yeah, some of the challenges.
So we built the business. We really grew when COVID hit. When the market grew, we saw an opportunity to really grow, and we took advantage of that opportunity. But at the same time, I wish it would have been helpful to build a little more infrastructure behind it, such that it would be more sustainable. Like I said, I tried to learn lessons from the past, and we did do a lot of that. But things got tougher really quick. And for us, that was just a big challenge for us to overcome. And I think the other thing is, we went public, and the cost and overhead associated with being a public company, that wasn't like the cause of that didn't result in us having to sell, deciding to sell the business. But it's just something that layers on that you spend less time focused on the core business, and you spend more time focused on other, I'll call them extraneous factors. So, I think there's a number of variables, but primarily it was that the market got more difficult, and it was difficult for us to adapt.
10 times more difficult. I mean,
yeah,
you went
it's still difficult, right?
2.5% to 7.5%.
Right.
So, a lot of companies weren't equipped. Now, I want to actually dive into that. Like, when a company goes public, I didn't realize all of the extra costs, right? If you were to look back, would you guys have went public, or would you?
Well, I think everybody would say that that was involved. So we had a private equity sponsor, Stone Point Capital. Great people to work with. They were extremely supportive of the business, and kind of good times and bad, so to speak. But I think all of us, private equity requires some sort of liquidity event at some point, and that we felt like that was the opportunity to start creating that. But at the end of the day, the public market itself it opened and closed very quickly, so we didn't take much of the company public. We only sold about 5% of the company through the public offering, and as a result, we had all the kind of the overhead associated with being public without actually being all that public, so to speak.
Yeah.
So I guess in hindsight, if we knew now or knew then what we know now, we probably would not have gone public.
Would you advise other big mortgage companies to make the decision to, PennyMac is public?
Yeah. Well, again, I think it really depends on what's driving the decision to go public. So I think there are multiple ways in which you can create liquidity. It doesn't have to be going public, as an example, but it may involve selling a controlling share of your business. So I think it really depends on kind of the motivation. But I will say that it's really difficult to go, technology companies, a lot of them go public to raise money. It's really difficult to raise money in the public markets as a mortgage company.
Yeah. And we're not attractive. We don't have a multiple.
It's really too cyclical. If you look at the ones that have been public for a while, now UWM's a little bit different animal because it's the leader in the origination segment. So if you look at the stock, it's performed, since the beginning it's down, but it's performed pretty well over the last year or so.
Yeah.
But PennyMac and Mr. Cooper are the two. And if you look at their business models, both of them are balanced such that they don't have big fluctuations when the market changes because they have so much servicing as part of their business model.
Yeah, because that servicing book is just stable, and that's how they make all their money.
Especially these days with rates being where they are.
Yeah. Now, do you think there's any specific skills or a mindset that someone has to have right now to survive in the mortgage industry?
I think that you have to be very diligent. So I think it's pretty easy to go home every day and kick the dog and say, wow, this is really hard. But I think you have to kind of stick to, what made you successful in the past or what makes people successful. I think that diligence and perseverance is really kind of the characteristics that, as much as anything, I think will carry people through.
Now, you're kind of looking at the industry now from a bird's eye. Mm-hmm. Being the chairman, being on multiple board seats, getting to collaborate with so many different visionaries. Now, from your bird's eye view, what do you think the mortgage industry has in store for the future?
I think it's getting close to what I would call equilibrium. So I still think there's too many people in the business. So, sorry for those of you that watch. Some of you need to go. But
I agree with you, by the way. We have 900 loan officers and 200 do business.
Yeah, I think there's a certain amount of inefficiency that's still in the business, and I think that has to continue to be wrung out. I mean, if you look at, as an example, if you look at the MBA, the performance index, I mean, independent mortgage bankers have lost substantial amounts of money the last 2 quarters, which does not indicate a market at equilibrium. So I think there's still some kind of room there. And I also think that I've been kind of thinking about how to characterize this. If you think about kind of the cycle that we talked about, Joe, where mortgage brokers kind of reached their apex in the early to mid 2000s, right?
Yeah.
And then there was this huge decline. You had the financial crisis. You had mortgage brokers having a target on their backs. You're the cause of it, right? So you had this regulation come down and market share just plummeted, right? I think retail lenders, being from Detroit, I look at retail lenders kind of like the auto companies in the 50s and 60s, where there was no competition other than the domestic competition, right? So what they do, they started building these huge cars with like tail fins and all kinds of features and stuff on it that people really didn't especially want, but it's how
cool.
It's how they could differentiate themselves. And they didn't really focus on, efficiency and, cost per loan and how's that interact with customer satisfaction, like that whole kind of picture. And what happened? Japanese companies came in, brought all those things in, ate their lunch, and the share is diffused all over the place now. I kind of look at retail lenders like that. Like they didn't have that scrappy, entrepreneurial, very focused competition. And now what you're seeing is you're starting to see that competition build up, right, over the last several years, to the point where, as you said, brokers are now taking more share, and many retail lenders are looking at it saying, I gotta be as efficient as them with the model that I have, or maybe some newer version of the model that I have. So I don't know if that analogy resonates.
No, that makes sense. That makes sense. Now, Willie, you've had multiple exits. You could have retired so many times. After all this success, and you totally have the financial freedom to retire, like what drives your motivation to continue to grind?
Yeah, well, I like solving problems, and I find the mortgage business, I think I was fortunate in that when I came into the business, like you said, a lot of folks come in at the front, right? They're production people. They grow their companies. They become more, kind of like generalists, right? I came in through the back. I came in through secondary marketing. So I understood, like from day one, how you make money and how many is made and how you make money. I understood how to make money. And so, but part of that was like, okay, there's this problem to solve here that I have to make sure I can cycle money through so that we can actually do more loans. And so I just found it fascinating. And so, like I told you, Joe, I'm not really interested in the day-to-day grind, but helping my friends solve problems in the business is still very interesting to me.
That's awesome to hear. Now, I've noticed you've mentored some of the most brilliant minds in the mortgage space, like, you got guys like Phil Shoemaker, Brian Decker. How do you foster this talent? How did you get to build these guys up so well?
Well, I mean, it starts with the fact that they're talented.
Yeah.
So, it's like Michael Jordan, right?
Yeah.
It's like
you found the talent.
Yeah, it's like you had to put something around it. But I think I think the people that, I don't know, my mentorship resonates with have typically run into issues in their career that they haven't been able to solve on their own, or have it impacted them negatively. And so, like when I met Phil, he was in a corporate culture that he did not like. And so right away, when I didn't really talk about the business right away, I talked about culture, or the importance of culture, and that resonated with him very quickly, because that's the reason he was even talking to me. Because I'm like, why, we were small then, and I was like, why are you even talking to me? It's like, you work at a much bigger company, you have done all the work to get it to a certain place. It's like, well, why are you talking to me? And it turned out he was not enamored with the culture. And I'm like, well, one thing you'll get from me is a culture. And if you're not aligned with how I think about it, then you shouldn't consider joining. So it's like, it's long story short, I find that, they've typically run into some issues in their career they haven't been able to solve on their own. So they're willing to listen to somebody who, maybe's kind of been through the ringer a few times.
I want to ask you this because you've built so many businesses, and and I think they've all had good exits, but with the exception of Home Point, which you wound down. But
we actually sold Home Point.
Oh, you sold it. So there was it wasn't a loss.
Right, that's right.
Yeah, it was still an exit.
Yes. I
mean, you could have kept it going.
We could.
Man, I wish we would have kept it. But no, because they were our number two. Like, we haven't found a number two.
Well, hopefully the Lone Star will build up to that point. That's my shameless plug for Phil.
Yeah.
But seriously, like I said, it's like I'm talking to a couple other people about their business and the opportunity specifically in wholesale. With Phil's full knowledge, I talk to Matt Ishby about it regularly, because I feel like there needs to be more. If Lone Star can get twice as big, I think that would be healthy. If there are going to be 3 or 4 Lone Stores like that, I think that would be healthy. I don't think there should be 20, and Matt would never let anybody get to his level, because that's they just do such a great job at UWM. But I think
Matt wants there to be competition.
Right.
He does. He doesn't want it just to be.
He and I talk about it frequently.
He doesn't want to be the only guy in town. He wants there to be healthy competition. It's good for the environment. It's good for the marketplace. It's good for mortgage brokers in general. Now, how important do you think it was taking risks to build Home Point, taking risks to build InterFirst, taking risks to build any mega organization?
Well, so I think it's better and harder to build from scratch. So as much as you can build from scratch, because you don't have to deal with this kind of the sins of the past, so to speak. And so I think, if anyone has the fortitude to do it, I recommend it. I think you have to be of a certain personality type. So to give you an idea, when we started Home Point, I had this leadership group, all of whom had a tremendous amount of experience and, very, very talented people, but they hadn't done work for what I would call work for a long time. In other words, they were more administrators and not kind of, on the ground. And one thing you learn in a startup is like, no one's coming to empty the garbage cans or change the toner. You're doing it yourself, right? It's like you just do what you need to do. And, unfortunately, I had kind of overhired for what we were. And so I really had to realign the leadership. I had to get people who were actually, not just thinkers, but doers at the same time. So like I said, I think it's probably optimal to try to build it. I mean, look at what UWM did, right? Matt pretty much built the wholesale side from scratch. So you can kind of build it in your image, so to speak, but it's really hard. But you have to be willing to take that, like you said, that level of risk, or have that fortitude to do it.
Now, I'm going to pivot a little bit in the conversation and just to talk about your family. Now, we talked about your kids, and you've managed to raise some very successful kids, thank God. And one of them being, a rocket scientist. People joke like, I'm not a rocket scientist, but he literally raised a rocket scientist. Now,
she's going to get mad because he's not technically a rocket scientist. Yeah. So. But she actually drives one of the Mars rovers, which, by the way, she's what they call, I think they call them rover pilots. By the way, they don't have a steering wheel, right? So she graduated in computer science.
Yeah, so you've raised great kids. And one thing I've noticed, raising kids when they're born into abundance is not easy. How did you manage to raise your kids so that they sustain that same level of grit that you had?
Yeah, it's funny because it kind of relates to what you were saying earlier about spoiling your kids a little bit. It's like we did a lot of things that I'd say a number of things that their peers probably couldn't, in school couldn't do, but they always had a level of appreciation for it. And I tried to instill that. It's like, we're doing this because you're privileged, but don't take advantage of that privilege. Enjoy the fact that we're privileged and that you have this privilege. And I think my kids were always very respectful of that. So they didn't. When we bought a car, I bought a car for my oldest daughter. She handed it down to each of the other two. It was a Ford C-Max. It wasn't a Mercedes, and it wasn't a big Jeep or anything like that. It was a basic, small, commuter type of a car. So, like I said, there's a certain amount of privilege that they had, but I always tried to help them understand to be respectful of that and be respectful to others who may not have that same privilege. And, fortunately it took. And, again, I'm a divorced parent, but my ex-wife is an excellent parent as well. And so, I think the kids had, they had some balance in their life, even though they had privilege as they were growing up.
Excellent. Now, I like to close out the podcast with a couple of questions. One of them is, about goals. Now, it's a three-pronged question.